In today's video, we're going to take a look at Reeves Utility Income Trust, ticker UTG. This is the 8th video that's a part of my portfolio series where I'm doing an in-depth analysis of all 31 stocks currently in my own portfolio. If you're new to my channel, my primary focus is on income investing and also dividend growth investing with offerings that offer at least a 4% yield. As I'll say in every video in this series, this isn't done in any particular order, so just because this video is 8th in this series does not mean that this is the 8th favorite stock that I have or the 8th largest holding. Also note that because I own all these holdings, I am biased towards them naturally, so do your own research and come to your own conclusion before making any investment decision for yourself. Also, let me know if there's any improvements to this series I can make going forward. Feel free to check out last week's video, which was on PennantPark Floating Rate Capital, which is a BDC that offers a 10% monthly dividend yield, ticker PFLT. Going into my Vanguard account, which is where I do all my dividend investing, as of the making of this video, I currently own 109.299 shares of UTG. Their stock pays monthly dividends, with their last being for 19 cents per share. With the number of shares that I own at this fund, I currently receive $20.76 a month in dividends from this stock. It's one of my smallest holdings because it's a very industry-specific investment. The Reeves Utility Income Fund is a closed-end fund that invests in public equity and fixed income markets of the United States. It seeks to invest specifically in dividend-paying stocks and debt instruments of companies operating within the utilities sector. UTG's investment objective is to provide a high level of after-tax income and total return, consisting primarily of tax-advantaged dividend income and capital appreciation. According to their website, UTG pursues this objective by investing at least 80% of its total assets in dividend-paying common and preferred stocks and debt instruments of companies within the utility sector, and up to 20% of the fund may be invested in securities of companies in other industries. Since UTG's inception in 2004, this fund has paid more than $1.2 billion in dividends. Despite this not being a very popular investment, there's so many things about it that I really do like. First is their dividend, because right now it currently yields over 8.5%, which is great, but on top of that, UTG also pays monthly distributions and they have a very long history of dividend growth over time. Since their IPO, they've consistently grown their monthly distributions over time to where it now pays almost twice as much as it did back when they first launched. In addition to their regular monthly dividends, UTG has also had a history of paying long-term capital gains as part of their distributions, which is why they've paid more in some years than others. This graph that they have on their website shows how their distribution amounts have kept growing over time. Just like their dividends, this fund's share price has also grown over time, although it hasn't been as impressive. You can see as of today, this fund's share price is up over 50% from its IPO, which doesn't really look like a whole lot considering it's been around for 19 years, but there's a couple things to keep in mind about this. It was much higher right before the pandemic and right before interest rates soared so much, which is an issue for this fund I'll touch more on later. Second, it's very rare for a dividend stock that yields as much as this one to see a lot of share price growth. There's only a couple other investments I can think of that offer good share price growth and a high dividend. One that comes to mind is Main Street Capital, which is a BDC that also pays monthly dividends, but other than that, there really aren't too many stocks out there that offer a high yield and a consistent amount of share price growth. Another reason I like this fund so much is that it offers exposure to a sector that typically doesn't offer high dividends. If you're an income investor or just a fan of some higher yielding stocks, it's very easy to become overly exposed to a very few specific industries like real estate and oil. But UTG offers high yield investors more portfolio diversification by holding utility companies. Probably most utility companies do offer dividends, but nowhere near as high as what this fund's offering, plus they don't typically pay dividends monthly. And because it's a closed-end fund, it holds a basket of different utility stocks, which makes it more diversified so you don't have to pick up a whole bunch of different utility companies yourself. Let's now take a look at the portfolio breakdown of UTG and see what's inside it. In their most recent fact sheet from March 31st, we can see 60.9% of UTG's portfolio is made up of utility companies, and 19.4% are communication services. If you recall in this fund's description, it said that they invest at least 80% of the total assets in this fund in companies in the utility industry, and up to 20% of the fund may be invested in securities of companies in other industries. The way their portfolio is currently balanced means that they currently meet this objective. They also invest 7.3% in real estate, 5.7% in industrials, and 4.7% in energy stocks. Coming through some of their holdings in this fund, we can see UTG currently has 50 different investments as of March 31st, and they have total net assets of $2.1 billion. A lot of their holdings do have pretty solid track records in terms of long-term growth. Xcel Energy, for example, has an 18-year track record of consistent dividend increases. Another one is American Corporation, which also has a pretty solid track record of growth. If we scroll down further on this list, we can see this fund also holds some REITs, which include American Tower Corporation, Crown Castle International Group, and Digital Realty Trust. They're only a minuscule amount of their overall portfolio though, and I guess these companies make up that 7.3% of their real estate holdings since American Tower and Crown Castle own communication properties. Another aspect about UTG that's made it a good holding in my opinion is that a large amount of their distributions have better tax treatment than REITs, BDCs, and other higher yielding investments on average. With these types of higher yielding investments, the dividends are almost always completely or overwhelmingly taxed as non-qualified or current income. With BDCs, you might see a very small amount of their dividends, like usually less than 10% of their distributions, being classified as qualified distributions. But with REITs, they're almost always classified as ordinary income. With UTG, though, you can see that hardly any of their dividends are categorized as non-qualified. This fund has a very long history of paying qualified distributions to shareholders. For dividend investors who like to hold higher yielding investments only in retirement accounts, this can make UTG potentially a much more appealing investment if you're the kind of person who hates paying taxes. But you can see it does change from year to year. It looks like some non-qualified dividends made up a small amount of their overall distributions in 2021. I've known plenty of people who just hate paying taxes as much as possible, so they only invest in these higher yielding stocks in retirement accounts, which is fine. Obviously, the downside though is that you can't touch that money until you reach 59.5, assuming they won't eventually raise that minimum wage for distributions at some time. Waiting until you reach this age, though, can squash any dreams you might have of being able to live off dividends much earlier in life. So this might be a reason to consider UTG for your non-retirement account if you like saving money on taxes. In terms of expense ratios, the Reeves Utility Income Fund currently charges 1.42%. Because it's a closed-end fund, they do charge much higher expense ratios on average compared to exchange-traded funds. At 1.42%, this is pretty average from what I've seen. Some PIMCO funds charge more and some charge less, which is pretty much the same for some other CEF managers like Naveen and Eaton Vance. When I consider the high monthly distributions and the consistent increases, I don't really have an issue with this fund charging as much as it currently does. But one thing that has been dragging UTG down recently is the high interest rate environment that we're currently in. When the feds raise interest rates, it does negatively impact the utility sector in a couple of ways. First, it becomes more expensive to borrow money, which obviously isn't unique to utilities, but what is unique is that these companies in this sector can have very large capital expenditures and high debt levels. Investing in new plants and infrastructure, as well as making improvements and repairs, becomes a lot more expensive during periods of high interest rates. This can obviously make the sector less appealing to invest in until rates go back down. Another reason is that some investors like to pour more money into bonds during this time when rates go up. Utilities have long been viewed as more of a defensive sector, but when bond rates go up, then investors typically pour more money into bonds instead of utility stocks, which again negatively impacts this fund and their share price performance. But there's certain other elements that you have to keep in mind when looking at utility stocks, which include energy prices and legislation that can negatively impact or positively impact their performance. While I certainly hope that interest rates do go back down soon, people seem to be speculating that this probably won't happen until next year. To summarize what we looked at, I think the Reeves Utility Income Fund is a good choice for high-yield investors who want some utility exposure in their portfolios. Because it only focuses on this sector, it's not something I'd suggest allocating a huge percentage of your overall portfolio to. But all things considered, this fund has a lot of really attractive features to it. It currently yields over 8.5% and it pays monthly dividends. They've been able to grow their dividend distributions pretty consistently, although some years they have seen more due to special dividends and capital gains. Since their IPO in 2004, UTG has provided an average annual return of 8.89%, which is good, and when compared to the S&P 500, you can see for the majority of the time it did beat the index until recently, when interest rates started going up. Once they start going back down, then I expect UTG to better perform and continue to beat the index. If we compare UTG with XLU, which is the Spider Utility Select ETF, you can see it's been a close battle, but UTG again typically comes out on top. But remember, UTG pays significantly higher dividends and they issue them monthly. This, in my opinion, makes it a far more appealing investment than XLU. With that being said, that's going to wrap up our look at the Reeves Utility Income Fund. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. You'll also have the option of reading this analysis as well as every other analysis that I do in this series. Plus, it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.